Good afternoon. Welcome to this installation of The Flip Side. Today I'm joined with Jeffrey Bochner, a mortgage banker with Movement Mortgage, has over 20 years of experience in the mortgage industry and with regards to home loans, refinancing. I asked him to join me here today specifically because of his intimate knowledge around the VA certificate of eligibility and what veterans can do with the VA home loan to not only just purchase the home, but also refinance or even remodel their home. Good morning, Jeff.
Good morning, Eric. How are you today?
I'm doing great.
Thanks for having me on.
So unless you have any objection, I'm going to jump right into the first question. I have a couple questions, and then we'll take questions from the audience as they pop up.
Best way to go. Let's go.
Awesome. So the first question is, what is the maximum loan amount available using the VA home loan process?
Great question. Now, of course, what you're going to find with the mortgage industry is a lot of our answers are, it depends. Okay, and the one that it depends in this case on where in the country you are. Every area has a different loan limit. If you're in a high cost area like you and I are here in the DC metropolitan area, the maximum loan with 0% down payment, the VA loan 0% down, would be $625,500.
Okay.
In other areas, it could be lower. Now, that doesn't mean that that's the maximum VA loan that you can get. That's just the maximum with 0% down. If you're willing to put down a down payment and you have a much higher cost home than that and you're VA eligible, there's a formula we use that essentially takes 25% of the difference between the sales price and the max loan amount, and then that becomes the down payment, 25% of the difference.
Okay.
The sales price. So you could be getting into a home for really 3, 4, 5% down in a very jumbo area, $800,000, $900,000 sales price. But for the most part, most of the veterans that we work with are well within the conforming limits of their area and able to use the 0% down for their VA loan.
Awesome. So what are some advantages? I mean, why would a veteran want to use a VA home loan instead of going conventional?
There's a tremendous amount of advantages, and most veterans don't know about them. The first thing is, of course, the 0% down.
Right.
You know, for a while there in the 2000s, there was 0% down for everybody because veterans had 0% down for decades available to them. Now we're back to it's really available only again for veterans, which is really the way it should be. There's a 0% down option that most veterans use. Obviously, the less you put down, the more you borrow. So you have to understand your payment will be a little bit higher. It's something to think about. However, interest rates on a VA loan are typically lower than they are on a conventional loan.
So, for example, if a conventional loan is at 4%, what could an individual who is applying for a VA loan, on average, I mean, we're not saying this is set in stone. Right. On average, what could they expect to see?
Right. Of course, rates change daily. So today, if you were at 4% on a conventional, I'd be thinking about 3.5 to 3.75% on a VA loan.
Not insignificant. That's a pretty substantial.
That's usually a quarter to a half a point differential is what makes people refinance out of whatever loan they're in. So you can imagine the benefit of getting in at that much lower. The other advantages of the VA loan, even with 0% down, there's no mortgage insurance. You've probably heard if you put down less than 20% on a loan that you have to pay some kind of mortgage insurance or increased interest rate to absorb the mortgage insurance. Mortgage insurance is a fee that you pay that guarantees the lender against some loss if the house went to foreclosure. In the case of VA, not only do you have a lower interest rate and 0% down, there is no mortgage insurance. That's a significant benefit.
Right.
The cost of mortgage insurance can be anywhere from 0.5% to 1%. So you take that 4% conventional loan, and let's say you were putting down 5% on that, right? 4% interest rate or 5% down. Your mortgage insurance would be worth another 0.5 to 0.75%. So really, your interest rate would be about 4.5%. Now let's compare that essentially 4.5% against that VA at 3.5%. Now you're really talking about a differential. Some other benefits of a VA loan include relaxed credit and income standards.
Okay.
So we'll take lower credit scores. We understand sometimes with different postings overseas or when you get transferred even domestically, that sometimes mail doesn't catch up, things can change.
Pay can be a problem when you transfer duty stations. There's
Right.
a delay in getting your pay.
Right. So there are all kinds of things that can happen. So because of that, there are more relaxed credit standards. We do look for the people who have the willingness and ability to pay their debts, but there's a more consideration given on the credit scores on veterans. The other thing that we look at is on the income side, we're allowed to expand your debt to income ratio over the conventional in order to be able to qualify for the loan. There are a couple other things that are important to know about VA loans. Closing costs can be paid by the seller, by the lender, so that's a benefit. So really, as a veteran, when you're putting 0% down, and in many geographic areas, the seller will be paying your closing costs as well. You can literally buy a home for maybe a couple $100 out of pocket. That's you couldn't buy a car like that.
Right. And that's not to say if you have the 20% that you still don't use the VA loan for those other reasons you just mentioned, the lower interest rate, and just the availability to get, your credit score. So even if you have 20%, there's still good reasons to use the VA home loan, correct?
Absolutely. You don't have to use a 0% down option. It just becomes the most popular option, of course, to put less down. And I'm sure, Eric, you could find something very profitable for them to do with that 20% versus putting it in their house. And we would show them probably some kind of an analysis that would help them make the best decision for them and their family. Yeah. So the other thing is when you do, we talk about purchases up to now, but a lot of people refinance into a VA loan. And what they don't realize is they can also do that. They can cash out to 100% of the value.
Oh, wow.
So they can take the money back out up to the 100%. If we're willing to let you purchase it with 0 down, we'll let you refinance it with 0
That's
down.
awesome.
It's a heck of a benefit. Most veterans don't understand they can cash out to 100%. And a lot of them say, Jeff, why would I want to cash out to 100%? Well, of course, let's talk specifically about veterans here. A lot of people who have served have maybe some kind of disability. Right? Whether it's a very overt or it could get worse over time. Maybe they want to retrofit their house a little bit to make things easier for them as they age. Right. Or to help them with impacts right now. Right. Taking some of that cash and doing those repairs and upgrades and renovations could be a great way to have a veteran, be able to stay in their home very long term with an affordable payment and affordable rate.
And speaking of the disability there, if a veteran has a disability rating, if I remember correctly, when you and I were talking, before the show, you mentioned there may be an opportunity to take that rating and help them qualify. Correct?
Absolutely. Yeah, absolutely. Disability income is income that we use to help you qualify. So, don't think that because you're not working, but you have a pension or Social Security and disability, that we're not going to count that income. No, we're going to count all of it, and we're even going to count. We're going to what's called gross up your disability income. So let's say you were getting $1,000 a month for disability. We would say that's worth $1,250 a month because you don't pay taxes on it. It's a tax-free benefit. So since you haven't have to be taxed on it, it really would be worth more. Right. So we'll give you a little bump that even again helps you qualify.
And that's an advantage that many veterans, we don't see that, myself included with my disability, because it's not qualified. It doesn't, the advantage is it doesn't count as income. When I file my taxes every year, I'm not paying taxes on it.
Right.
But that can also be a disadvantage. It doesn't count as income. So a lot of times people are like, well, how much income are you making? And I'm really making more than is shown on my W-2 or what have you.
Right. And this is the one case basically in lending, because typically if it doesn't show up on a W-2, 1099, or a tax return, we won't count it. But this, we have proof that you get it and that it is non-taxable income.
Awesome. So I'm going to roll right into a couple myths that I've heard talking to clients.
Sure.
I believe myself, and I just want to get it cleared up. Um, can the VA say they're not going to finance a property? Can they turn you down?
Well, of course, you can be turned down for financing, but typically it's because of something about credit or income that just is so far out of bounds that we just can't get there.
Okay.
But as far as the property is concerned, typically what they'll do is to protect the veteran. They'll make sure that anything that is in disrepair before you move in has to be fixed, and it typically has to be fixed by the seller at their expense before they'll let you move into it. So the protection there is not just for the lender. Sometimes people think, well, it's just the lender, they don't want to lend on it. Well, we don't want you getting into a situation where you're living in a subpar place,
Right.
that has health and safety issues. We're not going to talk about how it looks, as long as it, mostly as long as everything functions and there's no disrepair.
Well, let's say the roof needs to be replaced. If you don't have the seller do that, you're looking at potential bigger problems down the road.
Absolutely, and that's what we're trying to help you avoid that. So even though sometimes we come back, the VA appraiser comes back with a list of items to do, it's for your protection. There'll be another house out there that you'll be able to find in your price range that won't have these issues, and you'll be glad that there was someone else looking out for you.
And to be fair, if I was buying a house, I would want to know about these problems, and I would want them fixed. So I think it's a great idea to have the VA require an inspector.
Yeah.
One more safety.
Right. So, and just so you know that the VA appraisers are answerable to VA, not to us.
Okay.
We don't even use our regular appraisers for this. You have to order it through the VA portal.
That's good to know.
So this is another thing that they're really, really looking out for you here on doing this. So it's something that you want to pay attention to. So that's one of the things is, VA won't lend on certain properties. There's very few that end up not going through, just so you know.
Now, so they look at the properties. Can you have more than one property? Can I have multiple properties?
Absolutely. See, it's another thing. People think, well, I already have a VA loan and I can't get another one. Actually, so we see a lot of people, they were, they started out down in North Carolina or South Carolina, went to basic. We're down one of the forts down there for a while, and they were there long enough to buy their first home, just maybe a smaller home, and then they get posted overseas, and they get posted, and finally they end up in a place where they're going to be for a while, but they haven't sold that other house, right? Because if they sold it, they had put zero money down. There wasn't going to be much coming out, so they rented it. It's been
right. They have 10, 15 years of rent or whatever.
The important thing to know is that you could still buy another property, use a VA loan, and do zero down.
But what happens to the VA loan on the other house?
It's still there. As long as it's still being paid, it's fine. What we need is an updated copy of your certificate of entitlement, your COE, which the lender can help you get, or you can go right onto the va.gov website and look under home loans, and they will help you get your COE. If you're separated from service, I need your DD-214. If you're in service, you already know all the paperwork of what to hand to somebody. But yeah, we look at your certificate of entitlement, and you may have enough entitlement left in order to get another loan for zero down. Just did one a few months ago for someone, that exact situation. Had a property in North Carolina, was moving up to the DC area, towards Baltimore, buying a home. We had enough entitlement for her to do another zero down loan.
So let's paint that picture real quick. Using the $600,000 for the DC metro area as the max.
Mm-hmm.
You buy a house in North Carolina 10 years ago at the time you bought it for $200,000, but you've paid enough down and you only owe $150,000. Mm-hmm. So when you say remainder of entitlement, you would take the $600,000 minus the $150,000.
Oh, it's not. Gosh, if it were only that simple, Eric. Remember, this is a government form, so it couldn't quite be that easy. Now we don't do the calculation. The VA gives a calculation. They have a calculation that they use. I'm not privy to it, and they tell us how much entitlement is left.
So you don't really know until you apply.
Right, and it's not necessarily, and it's not the dollar amount of the loan. There's certain ways they express it, and then we take that and put that into our calculator, and it tells us whether we can do this for zero down, or do we have to use that 25% rule between the amount of entitlement, the amount of the sales price. Let's say there's, you're buying something for 500 up here, but your entitlement's only taking you to 400. And so now we have 100,000 left over, 25%. You have to put down $25,000, which is a little bit more than 5%.
Right, right.
Which again, it's still again, as I told you before, it's still a better deal than doing a conventional loan,
right,
5% down.
Right.
So you may or may not qualify for the second one, but a lot of people do, and most veterans think, "Oh, I can't qualify for a second VA," so they don't even try.
That's what I thought.
Yeah, and they don't even try. And I know VA has made it difficult on veterans in getting their benefits and a lot of red tape and so many things that you and I have discussed and the things that you're helping people out with. And a lot of times they think, oh, this is just one more way that we're not going to get what's owed to us. But when you have your lender, I'm not part of VA, man. I'm there to try to help you get a loan done. So I know our guidelines and our rules, and I can get your certificate of entitlement and say, here's what you're entitled to. Let's go do it. I don't need their permission after that. Once I have the COE, I don't need their permission.
Awesome.
So, and the COE, we can have that in a day or two.
Okay.
So that's not a big deal.
So along with the, and thank you, because I really didn't know that you could use it more than once at the same time. I didn't know you could own two properties,
Mm-hmm.
So along with that, can you repeat the use? So you own this house, you sell it. Does that mean your eligibility is gone? Or
Nope. You usually get your full eligibility back and do it again. Sell one, buy one. That's the beautiful thing. Now let's see. Another thing that people don't know is that if they own. They own the one in North Carolina. They bought the one up here, but they look back on that one in North Carolina since they did get it 10 years ago, and they kind of forgot about it as they've been moving around. That interest rate's still at 6%. From what it was 10 years ago. Oh, I can't refi it because it's like an investment property. No, you can refi it.
Oh.
Under your VA, it's called a VA interest rate reduction refinance loan. Of course, lower military and government, I'll give you the acronym. It's called a IRRL. IRRRL. I know you guys like acronyms. So it's called an IRRL, and interest rate reduction refinance loan, and it can be done on your property that's now an investment property as long as it was once owner occupied, which of course that's how you got the VA loan.
Right.
So
it has to be owner occupied at some point. That would lead me to believe you can't purchase a rental property using VA.
Correct.
Okay.
You cannot. It has to be owner occupied. We're not looking for you to build your wealth portfolio in real estate with the 0% down benefit. That's really for where you're supposed to live, but they do take into consideration that you do get moved around a lot, so that you can't always just sell what you just bought. So that's why we have the opportunity to maybe buy another one, as long as we're utilizing the entitlement of the COA.
So the last question I have, it's an unfortunate truth that there's a lot of divorces, right? I mean, divorce rate in the United States is very high. What happens in a divorce? I mean, if it's, dual military, if it's, one person has it, it just seems like it's pretty complicated.
Yes, you have found the most complicated part of VA to ask me about. So, all right, here's what happens. We're going to talk about a husband and wife, and in this case, we're going to say that the husband is the military spouse and the wife is the non-military spouse.
Okay.
You definitely want to talk. When I say I use the pronouns of he and she, him and her, you'll know what I'm talking about.
Right.
So he's a veteran. They bought a home together. At that time, she wasn't working, so they didn't put her on the loan. She was not a co-signer on the loan. So they get divorced. The wife wants to stay in the house with the kids.
Right.
Guess what? She can't.
Even if the husband says okay.
Even if the husband says okay, she can't, because the military spouse has to be living there. unless he's been posted abroad. But if they get divorced, they're no longer spouses. If she didn't co-sign the loan at the time, she's not entitled to stay in that loan. She can take the house. She's gonna have to refinance the loan into her
You
name.
have to buy the house from the husband, basically.
Well, buy it or just refinance it out of her name.
Okay.
Whatever their agreement.
Using just her credit, just her
income, just her credit. And that way he would get, that way the VA loan would be paid off. He would get his entitlement back. Now, if she was a co-signer on the loan, she had income, she had credit, and they use that to qualify, and they get divorced. The co-signer, as a co-signer, she can stay in that home and in that loan, but he loses his eligibility until that home is sold or refinanced.
So if she keeps it for 10, 15 years, he's not buying another home with a VA loan.
The VA. So when I told you could use it on a second home, right? But again, in this situation, because of the divorce and it's something to consider. There's a plus and a minus to married, people buying and doing that home together. Now, another thing you need to know is not divorce, but if you have two people who are not married and they're trying to buy a home using a VA loan, it may not be permitted to use the co-borrower because they're not spouses.
So even if they're partners,
I think that's
not legally married.
Yeah, I think that's been opened up, and there's things, but there's still, it hasn't completely caught up. So I would advise anybody looking at that, and these things change all the time, is to ask about your particular situation. I'm not going to give you a blanket statement on that one. I would say just let's talk to somebody about your particular situation and see what qualifies.
Cool.
Okay.
So anything else you can think of that we should be, maybe people have asked you about VA loans or?
Well, we've gone over the advantages, we've looked at the myths. One of the big things I mentioned briefly about the acronym, the EARL, is the VA refinances that people are not taking enough advantage of. It's so easy to do. There's almost no paperwork. There's no appraisal. I don't collect your pay stubs, W-2s, tax returns. Basically, we get a copy of your military ID to make sure, find out if you're still in the service. If you're not in service, that's okay too. We get your DD-214. We check to make sure, we pull a credit report to make sure the loan is in good standing. We get we collect a bank statement, because our only thing is you have to have a checking account. Why? So you can write a check for your mortgage. That's the only thing we care about. We don't do a new appraisal, and the fees are the fees are low. There's the regular closing costs, but there's no appraisal. There's no underwriting fee. So we can get these things closed in about 2 weeks.
And you don't necessarily have to do the refinance to get money out of it. I mean, you could just do a refinance of all your payment or change your mortgage.
Right. In this case, if you're doing that, this refinance, it's for no money out. The only money you can take out of it is for the closing costs, which is some of your lender fees, some of your title fees, some of your governmental, local governmental fees. And we can just roll those in. We take those out. We roll those right into the new loan amount, but your interest rate is lower. So I would just tell you, as of today, what are we at, July 28th or something in 2016. So I would just tell any veteran out there, if you're paying over 3.75% on your VA loan right now, you should be having a conversation with somebody who knows how to do that VA EARL, because you're probably leaving some money on the table, and getting your loan reset could be a benefit.
Absolutely. But to recap on that, only to refinance to lower the loan, the loan interest rate, not to take money out of the loan.
Right. If you want to do a cash out refinance, now you want to cash out, you want to take some money out and do the repairs I talked about, or pay off debt, or go on a trip, or invest with Eric. Those are all good reasons to take money out. Then you would have to do just a real loan application. Now we're going to verify income, credit, appraisal, So it's a different process at that point.
Right, but a lot of these people that are refinancing are doing it to lower interest rates, especially in today's environment. This sounds like an amazing tool. I really like the no paperwork. I really like you're not pulling a bunch of stuff.
Yeah.
Because it's so much faster.
Yeah. I mean, we'd close them faster if we could, but the federal law says the minimum required time is 8 days because you have to lock in an interest rate, send disclosures, and do those type of things. But so really, you could probably do these things in 4 or 5 days if there wasn't a federal law mandating a minimum of 8 days. So that's why I say it takes about 10 days, which is 2 weeks.
Awesome.
To get them done. And we're actively working on those right now because we've had some interest rate change. It's gone, we've had some good interest rates and they've gone down a little bit, and a lot of veterans can take advantage of this.
Awesome. Jeff, I really appreciate the time you took today to go over this with me. I got a ton of information I didn't know about, and I'm sure our watchers did as well.
Great.
Thanks again.
My pleasure. Thank you. And thank you to all our veterans, everybody who served and helped us out. We really appreciate it.